Great. Welcome, everybody, to Digital Asset News. My name is Rob. We got a lot of things to go over, so let's jump right in. We're going to talk about the fourth largest Bitcoin mining pool, POOLIN, is having a little issues with liquidity. So we'll take a look at what's going on there. And then we'll take a look at the story as I term it, is this really bad news as Bitcoin shorting fund feels or sees a sustained interest and inflows? Then we'll talk about some good news, the Ethereum merge. We'll talk about some more good news as there is potentially a soft landing in play. This is by a Goldman Sachs economist. And lastly, we'll talk about Binance stops USDC trading pairs and why this is just an interesting story about how they plan to move along. So first things first, let's take a look at the big story today, POOLIN. And if we take a look at it, I can't say this is like the worst thing of all time. I think we're kind of used to the whole issue with liquidity issues, as they call it. But here's what we got, which is going on today. So crypto mining POOLIN pauses Bitcoin and Ethereum withdrawals, citing liquidity problems. What's going on? And before we go on, I actually reached out to my contact from POOLIN and said, hey, man, can you come on the show and just talk about this? And I didn't hear a response. So maybe gentleman is just too busy, or maybe it's something more. I can't say exactly what it is. It's just the reports that we have. So POOLIN, one of the largest Bitcoin mining pools by hash rate, fourth largest, has announced it's temporarily suspended Bitcoin Ether withdrawals from its wallet service due to liquidity problems. In a Monday announcement, POOLIN said its wallet service was facing some liquidity problems due to recent increasing demands on withdrawals and plan to temporarily stop payouts of Bitcoin and Ether. So it's not just Bitcoin, it's also Ether. Please be assured all user assets are safe and the company's net worth is positive, said POOLIN. Before I go on, I'm not here to spread any FUD, but it's just one of those things where if you think about it, you're like, how many times have we heard that? And it actually doesn't work out to be that. However, POOLIN's been around quite some time, so we'll see how it all plays out. It just would make me a little bit concerned, because if there was no issues and no problems, whatever else, there wouldn't be any pausing of withdrawals. So sometimes when you got to think about it, just think when there's smoke, there's fire. They do go on to say that we'll make a snapshot of the remaining Bitcoin and ETH balances on Pool on September 6th to work out the balances. The daily mined coins after September 6th will be normally paid out per day. Other coins are absolutely not effective. And just to give you a insight as to how big they are, they're huge. Firm is responsible for roughly almost 11% of the Bitcoin blocks mined, all Bitcoin blocks mined over the last 12 months. And you can see here that you've got Foundry USA, 18% USA, all right. And Pool, F2 Pool, POOLIN, and then you got, and pretty close, Binance Pool is at 10, I didn't know that, 10.7%. Via BTC, 10.6, Slush Pool, SBI, Luxor, kind of rounding out to the little ones. But that is what is going on for that issue. And when I hear what's going on with Bitcoin miners, the first thing I think about it is the Puell multiple. And you can find all these awesome charts at Look Into Bitcoin. They are 100% free and they're pretty awesome. I like them. I like using them. First of all, what's the Puell? I think I'm saying that wrong. Puell multiple. This metric looks at the supply side of Bitcoin's economy, Bitcoin miners and their revenue. Because, you know, it's kind of hard when electricity goes up and the difficulty rate goes up and all these things go up because it's difficult as a Bitcoin miner. You guys got to remember that. And of course, Bitcoin miners, what are they going to do? They got to sell. They got to sell at some point because, hey, they got bills to pay, right? The Puell multiple is calculated by dividing the daily issuance value of Bitcoins by the 365-day moving average of daily issuance value. And then just so you know, periods where the value of Bitcoins issued on a daily basis has historically been extremely low when it enters the green box, which produced outsized returns for Bitcoin investors who bought Bitcoin here. Periods where it's in red, that means it's providing advantageous profit-taking for Bitcoin investors who sold it. That's why I like these charts, because I'm not that smart and I need colors to help me out. And this really does help me out. So really what comes out is this. When it's in green, you probably want to think about accumulating. When it's in red, you probably want to think about selling. This is not financial advice. I'm not a financial advisor, of course. But as we can see here, over the last, I don't know, a couple months or so, we've been in that range. And actually, we were above the range not too long ago. 20,000, 930, almost 21,000, 24,000, 24, 19,000. And then here we are yet again. September 1st, we were down there. was a good time to accumulate. And that's what we have as far as the POA multiple. So like when I take a look at these things, I take a look and say, this could be a pretty good opportunity to maybe to accumulate. But wait, there's more. Potentially bad news. Bitcoin shorting fund sees sustained interest and inflows. What's going on here? Well, investment products shorting Bitcoin sees record inflows. That's not good. It depends on how you see this, and I'll get to that in a second. Despite continued, this is of course from Blockworks, great website, check it out, blockworks.co. Despite continued low trading volumes and declining assets under management and crypto investment products overall, money going into the budding short Bitcoin offering space reached an all-time high. Crypto investment products had roughly 9 million in inflows last week, which I didn't think was that big of a deal. 9 million, what's that? Not a big deal to big whales. But just so you know, short Bitcoin investment products now have 158 million in assets under management, a new high. The largest such fund is ProShares Short Bitcoin Strategy ETF, BITI, it's funny, which launched in June after Bitcoin's price plummeted to less than $20,000. So just so you know, there's a lot of people out there that do not have the same conviction that maybe you or I have, and they're shorting it. And is that a bad move? Is that a good move? Well, in all honesty, for me, I kind of like it when they do these things because sometimes it pushes the price down and I can accumulate. I always see it as this. The next 2 years are going to suck. And it's going to be choppy waters, and we're going to have a lot of problems. And this is just a great time to accumulate. So if it pushes it down, I'm okay because I'm here for 3, 5, and 10 years, and that's the outlook. One thing I will say is that this next one, I'm going to get a heck of a lot better at selling. I did okay in 2021, but as time goes on, that's the plan. So to round out this article, BITI was up 20% from a month ago. As of Tuesday, as Bitcoin's price was just above 19.8, the fund is roughly 90 million assets, according to ETF.com. Oof. This follows the recent FOMC meeting at Jackson Hole, where Jerome Powell pretty much said that, hey, it's going to be a sustained effort to get down the interest rates, and they're going to have to keep on it. And he pretty much invoked Volcker. And we talked about this at the last DCA show with me, James, and Ben. And I know some people think it's not a big deal, but I think it's the Fed is going to have to push hard. And it's not about what the Fed should do. It's what the Fed will do. I don't think they should raise that interest rates that higher either. But guess what? They're looking at a lot of data retrospectively, which is going to push down a lot of different things in the economy. And unfortunately, what's going to take a hit? Probably risk on assets. Not investment advice, just investment opinion. And that's what we have for the articles. So let me know what you think about that in the comment section. And then also, of course, as we're talking about the teeter-tottering of the entire market, I want to thank Masterworks for sponsoring today's show. Remember, when one thing goes down in your portfolio, you want the other thing to go up, and back and forth and back and forth. I like Masterworks because you can invest in fractionalized shares of art. I have no idea. I have not refined it all. But I do have a Banksy and a Basquiat, fractionalized shares, mind you. And I've done pretty good since October 21. I'm up 40%, 39.6 to be exact. Here's the performance of annualized returns over these fractionalized shares of art. Here's how Masterworks is doing compared to the Russell, NASDAQ, and S&P. And oh yeah, it's beating the pants off of crypto as well. And the reason why it does is because rich people are crazy and they like art and they'll pay millions of dollars for it. Also, I know people are a little bit skittish about these things, and that's why it's okay for this one. It is registered with the SEC. You can find that on their website and all the different filings there. If you want to learn more, there's a link in the description. Looks just like this, and check it out. And also, as a little quick update, there's a new painting out. And I know some people say, well, do you need like tens of thousands? No, like this one, the price appreciation of similar works for this one, Albert Olin. I don't know what that is either. But you can invest with $500. And here's the market risk adjusted appreciation. Because remember, it's not how much you make, it's how much you keep. And sometimes it's better to be a little bit risk aversive. So compared to all the art market and S&P 500, this particular piece has a risk adjusted appreciation of 0.94. And just so you know, it's all done with the Sharpe ratio. I had to look this up myself. Sharpe ratio, all else equal, a higher Sharpe ratio is better. Standard deviation shows the volatility investment returns relative to its average return, and they give an example down here. But higher the better. And this one looks like a pretty good one. I'm actually getting into this myself. So that is just that little piece let's move on to some good news. Ethereum merge. This one, I know people are excited about this. I'm excited about this. You know why? Because I own Ethereum. And everything I talk about on this channel, I own. So I hope no one's under the disillusion that the things I talk about, I don't have skin in the game. I'm super biased, and that's just, sorry, it's just how it is. But this gives me hope. But the question is this going to be a sell, buy the rumor, sell the news? Ethereum's Bellatrix upgrade goes live this morning, actually, about 9 Eastern time. I guess that was 10 o'clock my time. So here's what's happening. And don't get too excited because there's another step to go. So currently, the Ethereum mainnet or proof of work chain and the beacon chain, the proof of stake chain, operate in parallel to one another. The purpose of this upgrade is to ensure validators are producing updated beacon chain blocks that will set up the code base ahead of the merge. The upgrade doesn't represent the entirety of the merge. It is the beginning of a two-part process, but it did go through today at roughly 8:44 a.m. And once the terminal total difficulty is reached, mining on Ethereum will end completely. Isn't that crazy to think about? All the miners for Ethereum, now they have to go to Ethereum Classic or whatever else they're going to do. It's amazing. And the merge will take place, known as the Paris upgrade. The merge itself, again, this is just the one of two parts, is expected to occur shortly after 9 p.m. on Wednesday, September 14th. And remember, for that to go to the next level, E2.0, this is not the last step. You still have to go through sharding, the sharding process. This is the beacon chain, proof of work to proof of stake. Now they got to go through sharding, which could happen another year. And also, don't forget, you can't unstake your ETH until that Shanghai protocol goes through, and that could be 6 months to 12 months later on. But I still see this as a step in the right direction. I'm pretty happy owning Ethereum myself. Let me know what you think about that in the comments section. And then, oh, hey, here's some more good news. Soft landing is in play. Now, on this channel, I'm been a little bit bearish, I think with good reason as we take a look at what's going on, especially with the problems that are going on in Europe, not just the war, but the ever-increasing cost of electricity, natural gas, gas itself, oil. Well, actually, oil has been going down. And, of course, job markets, for some reason, has been pretty strong, but it actually is going down just a touch. Housing market looks like there's a little less demand. And inflation isn't going on as fast as the Fed wanted to. So when I see stories like this, I'm like, I should probably talk about this so people can get a different perspective. Goldman says Fed has made progress toward a soft landing. Do tell. So a Goldman Sachs chief economist has reiterated his stance that the U.S. economy can still achieve a soft landing, although he acknowledges the path is narrow. Yeah, it is. For this to happen, though, what is required is sustained below trend output growth, which, I'll be honest with you, I mean, we have had a reduction in GDP, have we not? A rebalancing of the labor market via sharply lower job openings. And that hasn't gone away. We've seen more job openings, but it could still go down. And especially as we have unemployment's staying around the same. Maybe a little bit of uptick. This is coupled with a moderate rise in unemployment, that is true, and a large decline in inflation, which it has actually gone down, inflation. Actually, you know what? Before I forget, let me just do this. You guys haven't seen this website. It is fantastic. Trueflation.com. It uses 30 data set points, uses Chainlink as an oracle, pulls in all these data points. And what's great is it gives you real-time insights into inflation, right? So when the government was saying it's only 8.5% and transitory, we're like, no, it's not true. If we take a look at all these different areas, housing, transport, utilities, healthcare, so on and so forth, it was pretty high. But today, this is almost the lowest it's been. So that's pretty good. Unfortunately, for the UK, not so great. Sorry, guys. But I still think it's a step in the right direction. Anyhow, to finish up, the economist sees some encouraging signs as far as the recession is concerned. He sees a 1 in 3 possibility that a mild recession will start in the U.S. next year. I'll take a mild recession as opposed to a depression or heavy recession. Overall, Goldman Sachs strategist sees market trading range-bound, meaning very boring. I'm sorry for you traders. Probably going to chop sideways for some bid or even lower. But hey, I'll take it because I've been around when the crypto winter was and we lost 85, 95%, especially in alts. But that's where we're at. So let me know what you think about that in the comments section. That's not bad news. And let's finish up with Binance. Stops USDC trading pairs. And when I first saw this, I thought it was a little bit negative, but I've changed my tune on this one. Looks like it's just business as usual. Here's what I mean. So Binance is to rename all the stablecoin holdings to BUSD. So Binance, and there's something about the stablecoin I had no idea about. I was actually pleasantly surprised, and this might actually change my whole opinion on their stablecoin. Binance is removing multiple stablecoin trading pairs and will automatically convert user holdings in USDC and other stables, with the exception of Tether, into its USD. So everything outside of their stablecoin BUSD, they're going to convert it into BUSD. So USDC, Pax Dollar, True USD will be converted into Binance USD on September 29th at 11 p.m. When I first read this, I'm like, that's not good, because what is Binance backed up with? Well, you'd be surprised. And I was. It's backed up by everything. Competing stablecoins in their order books will be consolidated in the platform's native stable. Now, this is the big thing. The move won't affect withdrawals, however, and Binance customers will still be able to pull out funds denominated in the three stables. So if you're like, okay, you can change over to Binance USD, that's fine. I can still do the trades. Everything will be like Bitcoin to BUSD, ETH to USD, BUSD, Cardano. I think the Cardano's on there. BUSD. And then, of course, you want to take it out in USDC, you can do that. It's just that on the platform, it's going to switch over, besides Tether. And Binance said this is a business decision to enhance liquidity and capital efficiency for users. Binance USD, and this was what shocked me, I had no idea about this. Binance USD is 100% backed by cash and cash equivalents and a stablecoin regulated by the New York State Department of Financial Services. And if you know about those guys, they are a pain to deal with. They are a pain to get everything across. And if they're using that and it's been approved, so much the better. Users can be protected. I had no idea. Good for Binance. One more reason to use them, unless you're in Texas like me and I get suckered out of it. FTX similarly aggregates stablecoin deposits of USDC, True USD, USDP, and BUSD as USD and its customers exchange wallets while accounting for USDT balances separately. And you would think that the CEO of USDC, Jeremy Lara, would be like, I don't like that. But he did. He said, this is good. He said this, prediction. This move leads to a gradual net share shift from USDT to Binance and USDC. Maybe it will. I have no idea. But I just found it interesting that they don't move things from USDC, Pax, and all that stuff into Tether. They don't change it. But right now it's BUSD and Tether. So that's it for that story. Let me just think about it in the comments. And then lastly, just as a little update, I know it's confusing sometimes to people when we do the show, because we have the live right now. You're watching this live. I am live. Hello. So when we do the live show, we go right into the Q&A. And after that, we immediately edit the video to where there's now two videos. One video is the live show, which is today is about 18 minutes. And then the Q&A will probably take another 20, 30 minutes or whatever else. And we chop those in for a reason. It's because the algorithm does not like very long, super long videos, and neither do people who watch it. So when they look at my video or our videos and they say, hey, this is an hour long, I'm not watching that. I'm going to go watch something else. And the algorithm isn't like that. So we chop it up to make it digestible for everybody, bite-sized pieces, right? But to make sure we get it all right, because guess what? YouTube's not notifying you. And that's just how it is. We separated it. And in the playlist from now on, will be a playlist for the live streams, and it will all be organized by date. So you can find it. And then the Q&A, which is chopped up, so you don't have to search all over the place. It'll be right there as well. And I will link that in the description after today's video. And that's it. So look, not too bad, about 19 minutes or so. And that's all we got today. So look, thanks for stopping by on a Tuesday. I do appreciate it. If you like today's video, give it a thumbs up and subscribe, all that good stuff. Now, if you want to stick around for the Q&A like I talk about, I'll answer all your questions to the best of my abilities, and we will go from there. But if not, adios. Thanks for stopping. Appreciate you. Let's get into a little Q&A.